Well, good morning, everyone. Thanks so much for tuning in. I'm Ryan Kalei-Suji, joined by Yunji Denise, and this is Spotlight Hawaii, of course, a program where we highlight some of the issues and headlines here in the state of Hawaii. And one of those topics that we are going to tackle today, Yunji, is our economy.
Yeah, we want to talk about the economic recovery, where Hawaii is right now, and how we are trying to get ourselves out of the hole created by the coronavirus pandemic. Of course, we see all these tourists coming back, but what does that mean for our unemployment levels and really, how people are living day to day? And so we've invited Bob Harrison from First Hawaiian Bank, CEO there, along with University of Hawaii Economic Research Organization, UHERO Executive Director Carl Bonham. Thank you, gentlemen, for being here this morning. Professor Bonham, I want to start with you. Can you give us a lay of the land? Where are we when it comes to economic recovery right now in Hawaii?
Well, we're still very much in the beginning phases of that recovery, and you pointed out the tourism recovery that we're seeing, and that is accelerating, and we are seeing many more visitors. If you look at the April data, we're probably going to end April with visitor counts about 55 to 60% of 2019 levels. So that's really quite impressive, up from the 30% level in March. And an interesting feature there is that they're almost all U.S. visitors. There's virtually no international visitors. So we're talking about U.S. visitors recovering to roughly 75 to 80% of where they were in 2019, which is really pretty astounding. Now, having said that, right, the restaurants, the hotels, and others are still dealing with some social distancing issues and capacity constraints, and they're still not full by any stretch. And so the employment picture hasn't recovered quite as much as those initial visitor numbers, but they will. The employment picture is going to improve. April is going to be better than March. The summer is likely to be a strong period for hiring, and we're going to continue to see growth in employment and falling unemployment rates as we go into the summer, into the fall.
Bob, how about for you, what you're seeing at the bank, and what sort of sectors are you seeing from your customers that are continuing to struggle? What are some of the trends that you're noticing as a financial institution in the state?
Yeah, thanks, Ryan. And a lot of things happening right now. People are very happy that they're getting back to work. They are, to Carl's point, jobs are opening, and quite frankly, what I'm hearing over the last couple of weeks, it's been hard to fill them for a lot of businesses. They're struggling to find workers to come back to work with this really kind of a very quick uptick in tourism. We have seen some businesses do quite well over the last few months, even the whole pandemic. Car dealerships that we had all thought probably would have not done as well have done incredibly well, and it's hard to get cars now. We've all read about the manufacturers' productions issues, so I think that will be tight inventories through the summer, probably, or at least up until the middle of the summer. Maybe it'll get better as that goes. Consumer credit is doing quite well. I think the support payments from the federal government were crucial, and that's really made a difference in people's lives to able to get through day-to-day life and get by. So some real strong indicators there, but really what's interesting to me is how quickly the tourism business seems to be coming back, and the jobs that's opening at restaurants and various other areas that are now looking for workers. Construction has also been a very steady hand through this. They've been working very, very strongly throughout the entire pandemic.
Carl, I want to go to some of what Bob was saying about these areas that are sort of hiring people back at a fast clip. What are the areas that you think will be more permanent job losses? Where are the shifts in the economy happening?
To be honest, they're really, right now, you can't point to a sector where you can say unequivocally there's going to be permanent job losses there. The thing that would lead to permanent job losses is if we don't get out and vaccinate enough people to put the virus almost completely behind us, right? What would lead to permanent job losses, which would be in the high contact areas, would be if the pandemic really sort of continued to simmer and to constantly have outbreaks every 3 to 6 months. But we're doing really well on the vaccine front, and we released a blog a couple of weeks ago talking about what would happen in terms of reaching a large percentage of our population if we just continue at the same rate. And if we do that and we really get back to normal, we're not really talking about permanent job losses. We're talking about some sectors recovering faster than others. And with the really strong tourism recovery that we expect this summer, we really don't see a reason to think that those sectors won't recover even faster in July and August. So remember, that's also when people are really going to be looking at the fact that the federal stimulus, the extra unemployment benefits, is all going to be set to run out in September. And people are going to be vaccinated, right? They're going to be looking forward to childcare and looking forward to schools reopening, and they're going to want to be back at work.
Professor, I want to expand a little bit more about that, what you just mentioned there. With that federal support running out in September, do you anticipate there being a significant impact to the economy because of the support that's being provided by the federal government right now through unemployment and through other measures to help the state stabilize and rebuild the economy? Do you expect some fall off there as this federal support runs out?
I mean, there is going to be fall off if you make the wrong comparisons, right? So if you compare, the end of 2021 or the beginning of 2022 with the end of 2020 in terms of, say, total household income, there's going to be fall off because in the end of 2021 and the beginning of 2022, you won't have the extra unemployment benefits. You won't have the house direct payments to households. So, but those are really the wrong comparisons. If you go back and compare to 2019, what we see is actually income not falling below 2019 levels at any time in the forecast horizon, because the economic recovery is expected to accelerate enough to essentially support the community as the federal support begins to go away. And keep in mind, there's going to be other forms. We'll see what happens in Washington, right? But I think there's a pretty good chance that we're going to see at least some money in the form of infrastructure spending, which we desperately need in Hawaii.
And maybe I can add to that, Ryan, if you don't mind, Angie. Sorry. The other thing you need to keep in mind is what's happened is people have been really doing a great job with those stimulus payments and all that money coming in, and they're putting it in their bank accounts across the entire country, certainly in Hawaii, ourselves, the other local banks. Deposit balances have gone up dramatically, and not just businesses, but consumers kind of across the board. So people are managing this very carefully. And even if those stimulus payments slow down and go away, they have some cash that they've put aside to help them get through that period of time between when that ends and when they start going back to work.
That's interesting.
That's a really good point, Bob. So the national estimates that I've seen suggest that actually we're a little surprised that consumers are continuing to spend as much as they are out of the third stimulus check. But we're seeing consumers save or pay down debt with about 75% of that money. And so, that's really helping household balance sheets and sets the stage for that recovery to continue.
And a longer recovery, because it's not just, I got to get over a hump. I've really kind of gotten, it's going to sound terrible. Financially, I got better over this period of time because I took in that money, paid down my personal debt, have cash in my checking account, savings account, and now I'm ready as the economy restarts to kind of grow into that. So there could be quite a bit of upside over the next couple of years.
One of the areas, Bob, where we've seen tremendous upside just in recent months is Hawaii's housing market. It seems that the minute a single family home goes on the market, within a week or two, it's gone. Can you tell us a little bit about the real estate trends you're seeing? Just because there is such, it's so tight right now. What are you projecting in the future when it comes to the real estate market?
Well, Carl, I've had this many times, and I think that's our biggest challenge right now as a state and as an economy, and we're not alone in this, is to build enough housing to give places for people to live, not make it more affordable. We've seen the numbers. $950,000 was the median single-family price of a home on Oahu this last month. That's out of reach for most of the people working in Hawaii, and so and I think it's a lot of Hawaii people buying homes or upsizing homes It's not necessarily a lot of people coming from somewhere else to buy the homes. It's a combination of both, obviously, but there's strong demand within Hawaii. But if you don't have a home, it's very hard to get that first home. And I think that's the challenge we face as a community that we better do something about. And we've been undersupplying housing for kind of 15 or 20 years now. And now we're seeing everything come together. I'm not spending on something else. I have money. I want more space because I'm working from home. I'm going to buy a house right at the same time everybody else is doing it. And so that just crests in this demand and lack of supply that drives up housing costs very strongly.
So this is actually a standard characteristic of Hawaii's housing market, is anytime there's a shock to demand, so anything that causes demand to jump. And in this case, it's the incredibly low interest rates. It's the need for more space to work from home. Anytime that increases, because our supply is so limited, we get these jumps in prices, and we've seen it over and over. And if you look at the supply of housing, if you look at how many units were permitted, total housing units permitted, as Bob said, over the last 10 to 15 years, actually over the last decade, we've had 4 of the lowest number of houses permitted, going all the way back to the 80s. And 2019 was actually near the bottom. We're talking about within 100 housing units of the lowest we've ever permitted since in the last 30 years. So if you don't build houses, then this is what we get.
Yeah, and you can't grow as a state, and then people can't progress up through, as they grow in their career, they can't grow to a bigger house. They need more space. They're having a family. I mean, all those issues just it stops. There's no movement. And that creates
actually that lack of movement is really important, because if there's no movement, right, if home prices, and so what we're really seeing right now is mostly the mix of homes. It's really a single family home issue. The bottom end of the condo market is still, it's beginning to change, but it's not moving like the top end of the single family home market. But if you haven't built homes and there's no movement, there's no place for entry level people to get in, right? There's not enough supply of the starter place, right? That 1-bedroom condo that you sort of have to start into to get it, build up equity so you can move up the ladder.
One of the things that we like to do in this program is bringing questions from the audience. This is an interesting one from Ingrid Peterson, who's asking, Carl, what is your opinion about raising the minimum wage and the impact of gradually raising the minimum wage on the economy in businesses and on consumer spending and loss of population to the mainland? We know that this continues to be a topic that is debated about not only here locally, but nationally, just the overall minimum wage. But what is your thought about how increasing the minimum wage right now during this time in our state's economy and recovery, how would that significantly impact the overall state of and well-being of the economy?
So look, this is a tough issue, and it's not nearly as cut and dry as either side would have you believe. It is absolutely not true that the vast majority of research now says that raising the minimum wage is only good, which is often what you hear. And it's certainly not true that raising the minimum wage is going to devastate all of our small businesses and cost huge job losses. It's much more nuanced than that, and it's challenging. Obviously, there's not a lot of good evidence that tells us what will happen from an increase in the minimum wage when we're talking about high single-digit unemployment rates. And so some caution, I think, is warranted. At the same time, we do know that raising the minimum wage does help the people at the bottom of the income distribution. And that's something that's really important for Hawaii. It's not necessarily the best way to do it. And I think what we really should be looking at is gradual increases in the minimum wage. And I'm a strong advocate of indexing it. It just makes no sense that we have these debates, every year or every 5 years or every 10 years, and then and we don't raise the minimum wage for a decade or 2 decades, and then in real dollars it just keeps going down and down. It just makes no sense to go through this process.
Yeah, maybe to add a comment there, I totally agree with Carl. It's much more nuanced. We're paying substantially above minimum wage for our entry-level positions. But back to what we talked about earlier, either way, that's not going to help you buy a house in Hawaii. You know, my daughter's a school teacher, my oldest, and when we go out to restaurants together as a family, she sees other school teachers working in the restaurant as a second job. You know, that's because the cost of housing, that's less about the wage. It's much more about the cost of housing. But again, Carl and I can talk about this forever, so I'll stop with that.
Well, let's talk about some of the ways that banks have been able to help people through this pandemic. We know that a lot of people did lose jobs early on, and some of those folks were homeowners who perhaps couldn't meet a mortgage, you know, in different circumstances. What are some ways that people have reached out, and how have you been working with your customers to help them through this time?
Yeah, thanks. You know, we try to be very proactive about that. On the consumer side, pretty much anybody who wanted a deferral, we gave it to them. And we've got a lot of criticism by the investment community about that. We have close to 30% of our loans were deferred second quarter last year. But the vast majority have all come back to payment now. People needed a bridge. We want to make sure they had a bridge, and they dealt with it. They dealt with the job loss and getting on unemployment insurance and, you know, all those things. And so that worked out really, really well. People wanted to work remotely. So, you know, our mobile offering was, you know, adoption went up dramatically. People went to ATMs instead of going to a teller. You know, all those options were important as well. And then lastly, for businesses, small businesses, the PPP Payment Protection Program loans through the SBA were phenomenally successful. It just made a huge difference. We did, I think, 6,000 loans the first round, which was just under $1 billion. We just finished doing this second round, almost $460 million. It is just ending in the next week or two as the money runs out. And the demand's going down, so that's good. And that all the businesses who needed it and could apply, applied. So you really have seen a bridge that helped businesses and consumers over this last 12 months. And quite frankly, it's worked out much better than I had ever could have hoped.
Carl, I want to talk to you a little bit about what's happening with the tourism industry here in Hawaii and some of the things that are happening in the state legislature that may impact our numbers. You know, there have been recent bills that have just been passed through, one that would impose a new hotel room tax of up to 3%. There's also the raising of rental car fees for visitors, seemingly looking like the legislature putting the burden back on visitors coming to the islands. How much of an impact do you think that will have on our visitor industry, and how that will impact the landscape of how much we rely on tourism here in our economy?
You know, I haven't looked at the rental car surcharge, and you know, the 3%. Actually, if I remember right, the legislation allowed the counties to impose an additional 3%, and then took some of the TAT away from the counties. I think that's probably the same thing as a tax increase. I think it again, it's kind of like the minimum wage. It's nuanced. You obviously need to be careful that we make sure that the industry is still competitive, and don't get fooled into thinking that this pent up demand bounce back in U.S. demand for visits to Hawaii is some kind of a permanent feature that we can just rely on. It's really important that the money that is raised is spent in a way that helps to manage tourism, right? There's a lot of concern in the community, much of it well-founded, about whether or not we are managing tourism for tourists or managing it for residents. And it's important that we spend that revenue in a way that makes the experience positive for visitors and for residents alike. And we have to do that. And we haven't done that in the past.
I want to bring in another viewer question. We'll pose this to Bob first, but I'd love both of you to take it on. It says, I know some places are having a hard time hiring staff. They've raised their wages, but it seems that people would rather stay on unemployment and rely on stimulus checks. Is that an issue in other places and companies, or something that we're experiencing only in some industries? Bob, I know that you have, plenty of employees yourself. Have you had a hard time hiring? And what are you hearing from your customers who are business owners about the hiring landscape? This idea that people prefer to stay on unemployment, is that real, or is that just sort of an urban myth?
Anecdotally, I've heard that from enough different customers, both here and in some of our customers in California. I think it's a little bit more than an urban myth, but I think that will, again, to Carl's steal a term from him, it's nuanced. I mean, if you're if you're a family that doesn't have childcare and you were going to work while your kids were going to school and your kids are now homeschooled and they're too young to be left home alone, you don't have a choice, right? So that's driving some of that. We have had to address the question directly. We have had some positions that are very hard to fill. It's just a lot of customer frontline things that people are a little wary about still, whether that's they're not vaccinated yet, they don't like the hours, or the unemployment insurance and government support payments. It's probably a combination of many of those, but I think it's a little bit more than just urban myth.
There's basically the research has been done on this, and there's actually been quite a bit, but it was all done with the initial CARES Act, right? And we really haven't had long enough experience and time to collect the data to understand what the effects are now. And the world is so different today, right? So with the initial CARES Act, you wanted people to stay home, right? So you didn't want them going back out into the labor market and looking for work because they had to, because we were in the middle of an uncertain time with surging case counts. Today is different. Now we've got a situation where the demand for workers is growing faster than the supply, and so it makes sense, and it should be the case that those expanded unemployment benefits and the direct payments are having an effect. They are having a negative effect on people's willingness to seek employment. But you need to remember that it's a short term. Those run out. Right, the last stimulus check, you're not going to get another stimulus check in August, folks. It's not going to happen. And the extended unemployment benefits end as well. And so if someone's choosing between, a good job prospect with an employer that they like and they look at it as a long term versus 2 more months of unemployment benefits, what do you think they're going to choose? Right? I mean, it's nuanced. There's a lot of different things going on, and I personally think the child care is a huge issue, and I was happy to see some of the support for child care in the president's latest announcements.
We have talked in length on this platform and through our conversations with other leaders about the diversity of Hawaii's economy, the reliance on tourism, and trying to find ways to invest in other sectors. Carl, from what you're seeing, what do you believe some of those other sectors could be that could help to provide this additional support and help to boost the economy long term? We realize that it's not going to happen overnight, but what are you seeing in terms of where those other industries could significantly impact the overall economy?
So that was an interesting statement. You said we realize that it's not going to happen overnight, because it's not clear that everybody realizes that. This is something that is going to take decades. I think we're going to see some diversification automatically, right? So when tourism goes through a downturn, so some of these people who aren't going back to work in bars and restaurants have started their own businesses. They've already started a pop-up delivery business, or maybe they're cooking out of their kitchen now, and they've set up a website, and so you're going to get some entrepreneurial activity. And some of it is going to be moving away from tourism. So some of that's just going to happen. We actually released a blog and a brief, UHERO brief, by a new UHERO faculty member that's joining us this summer, Stephen Bond-Smith. You can find it on our website, that talks in detail about a strategy for focusing on what is unique about Hawaii. You can think about aquaculture, you can think about astronomy, the things that we can do better than anyone else in the world is really where we want to focus. And it's not really about direct government subsidies. It's about facilitating connections between what we're good at and making sure that we can. Actually, a good example of this is some of the incubators and the accelerators that are helping people who have primarily served tourism over the years, whatever they're manufacturing, to sell on the internet, right, to reach a global market. So it's a lot of little things.
Mm-hmm.
But Carl, the numbers, if I could add to that, the numbers on how many people are employed in tourism. And what we're talking about are scores or hundreds of jobs, not thousands or tens of thousands of jobs. So that's why it takes decades, and it's getting money from outside the state to come in, because that's what tourism does. You know, it's great when we trade money amongst ourselves, but to grow the state, we need money to come in from the outside, and that's exporting our tourism, our experience, and that's what we do with tourism. But what else is it going to be? Is it going to be something structural, or is it going to be that's going to take a lot of time? We've been trying to do this. I talked to my predecessors, Don Horner, Walter Dodds. We've been trying to do this for 40 years. We've been doing it for 4 decades, and we're at where we're at today. So a little dose of reality there. It's not that nobody's been trying to do this for a long time. We have. It's not that easy. There's other places that are really good at doing things too, and they're trying to do everything we're trying to do. It's a worldwide competition. So that's why we need to focus on what we're good at. And that's where we have to be realistic too. It will take some time.
You know, Bob, you made, oh, sorry, go ahead.
It's a great point, Bob. It is something, this is what I was talking about before when I was talking about not being able to sort of flip a light switch and diversify the economy so you don't have to bring visitors anymore. And it just doesn't work that way.
Bob, you made mention earlier about some of the things that the bank had done in terms of sort of pivoting to meet customers where they are at now in this new environment. I know that this is a big week for FHB when it comes to technical innovation. Can you share a little bit about what you're doing that's different and the announcement that you made this week?
No, thank you. You know, just this week we launched a new mobile app, completely different, a lot more features and functionality to serve our customers how they want. You know, they can do a lot more remotely and through the app. And then we're not getting rid of our branch network. It's a critical piece of that, but it's really allows them to choose how they want to be served. And at the same time, we have seen, and we've seen this other places as well in the industry, that for big, complicated topics, people like to come talk to somebody face to face and or through a virtual meeting, and it's not just on your mobile app. We also completely redid our website about a month ago, easier to navigate, more information, easier to find the information. So all of that is how we're better serving the customer. And that's what we need to keep doing going forward, because that hybrid model of mobile and technology with the human touch and really forming that relationship, whether it's digitally or in person, that's what people want.
You know, as our time wraps up here, Carl, I'm wondering if you can, your final thoughts and words here on this for our program and for our viewers here this morning on where you see the state heading for the rest of the year and any other projections or predictions that you may have moving forward.
So we're going to release a forecast update in coming weeks, and it will be more optimistic than our last one. In fact, it will be essentially very, very similar to our last optimistic scenario. And it's primarily, I mean, everything is changing so fast. The pace of vaccination is so much faster than anybody really anticipated. Right? We used to think, oh, well, people will be able to get access to the vaccine by summer. Now it's looking more like, you know, we could hit 70% of the population by summer. And so it's a much more optimistic outlook. The job market is going to continue to recover. And if I could just pivot just a little bit, because when I'm listening to Bob talk about all the things they're doing, you know, to improve the customer experience and to, you know, we've heard politicians talk about how we have to enter the digital age, but we forget that the state hasn't entered the digital age, and there isn't much conversation. I'm not hearing a lot of conversation about how we can make government better, and I think that's something that we need to pivot some of our focus into. How do we make sure that government services are provided more efficiently and more consumer focused?
Yeah, I got to put in a plug, Carl. You gave me the softball. I've been working on this Transform Hawaii Government Group for, 15 years now. This is when Governor Ige was head of Ways and Means when we first started doing this, to help them kind of transform their technology. And there's some things happening under the surface, kind of at the infrastructure level for state government, and the city and county of Honolulu has made some progress, but it hasn't, to your point, made it to the consumer yet. It hasn't made it to the population as broadly as it needs to. So that's an important next step.
Okay, well, thank you both for being here this morning. We really appreciate both of your insights on our economy and the recovery ahead. Thank you again to First Hawaiian Bank CEO Bob Harrison and UHERO Executive Director Carl Bonham. Have a great day.
Thank you both.
Mahalo.
Interesting there, Ryan, to hear both of their perspective. I mean, the good news there is you heard a lot of optimism when it comes to job growth and people being hired back. A lot of that, of course, tied to the vaccine. The missing piece there, as Professor Bonham pointed out, though, is the childcare. And, you know, as schools reopen and people are able to get their kids into programs, that will be a big factor as well. But, you know, I did hear a lot of positives in the outlook there.
Yeah, you know, I was just thinking back to when we interviewed Professor Bonham, you know, in the middle of the pandemic last year, and just hearing some of the projections and some of the concerns that he had about where the economy was going. And it was real concerns that lawmakers shared as well. A lot more optimism, certainly, from hearing his projections here, looking into the future. A lot of that, of course, attributed to the federal support that has come through and being able to help the state through this time. But also saying that once this runs out, once this federal support runs out at the end of the summer, he doesn't also expect a big drop off. There will be some significant, there will be some impact, but won't be as maybe significant as maybe some have thought it would be.
Yeah, that's very encouraging to hear. Also interesting to hear both of their thoughts, as we have many times from other leaders heard about the tight housing market and just the shortage of homes, and just what an impact that has in the upward mobility of us as a community, that people can't get into that entry-level home and they can't grow that equity and then make it to the next step. So that's something that, of course, city and state leaders have tried to address for many years, and they continue to do so. One aspect of that, of course, is city planning. And to talk about that on Friday, we're going to be talking to Honolulu Mayor Rick Blanchiardi. We'll be talking to him about his plan to increase affordable housing, also to address homelessness, and then some broader, topics just when it comes to the pandemic itself. What does he think about the tier system, and also the new CDC guidance that says that if you're outdoors and you're vaccinated, you don't necessarily need to wear a mask.
Yeah, we have a lot of questions for the mayor on a wide range of topics and issues that I'm sure many of you will also have questions for him as well. So we encourage you to tune right back here on Friday at 10:30 for another edition of Spotlight Hawaii with the mayor. Until then, stay safe and take care. Aloha.
Aloha.